Welcome to today's Heartland Market Talk. Grain futures sharply higher on the wheat market, pulling the corn and soybeans with it. Overnight, French milling wheat bolted to new life of all-time contract highs to $310 a metric ton, pulling Kansas and Chicago wheat back up into new contract hot territory, while Minneapolis tries to recover on the spread. So a lot to get to here. First out on the wheat, concerns of another 2 to 5 inches of rain on the eastern coast of Australia. The wheat crop there, this crop is ripe, waiting to be harvested, or it's ripening, wanting to be harvesting. And as many farmers know, you don't want cloudy days with 2 to 5 inches of rain over a short period of time. And so what they're deducting is maybe up to 4 million metric tons and climbing of this wheat is being downgraded to feed wheat, taking away this hope for new flush supplies of new crop wheat to help loosen up the situation out there. That's not likely to happen. Adding insult to injury is the continuation of more torrential rains in the southwestern port of Canada, which has taken out a major rail line to moving grain out through Vancouver. Now, the catch about this is it's actually negative for spring wheat, because if the wheat can't go west, it's going to come south into the U.S., deliverable against the Minneapolis Grain Exchange. This is why Minneapolis wheat turned sour on the spreads, more specifically last week, Tuesday, when the derailment occurred, or should I say the rail line got taken offline, and Minneapolis has been a struggle. Today, Minneapolis up 17 cents, Kansas up 29 to 30 cents, while Chicago's up 24. So the bloom is off Minneapolis for a night right now, and as Minneapolis wheat goes up, it's going up with the wheat as more supplies are anticipated to come out of Canada. One thing we know that's going to go up into Canada is more corn to compensate for their lost feed production of growing last summer. And likely the reduction of canola that we're going to see on the next Stats Canada data report due out December 3rd, when they're likely going to lower the spring wheat crop, lower the canola crop. We shall see on December 3rd. But for today, again, that push higher continues. On a side note that's also friendly wheat, Russian troops continue to mass along the Ukrainian border, causing geopolitical concern like it did last year in May, when many were fearing an imminent invasion of Ukraine from Russia. Now, again, it's happening on Russia's side of the border, but they've amassed 100,000 troops. It's like the National Guard playing 50 miles away from the border of North Dakota, aiming their weapons at Montana, and looking rather threatening. And this is creating concern. What are you doing there? But again, Putin has a right to do anything he wants to do with his troops, play army, whatever he wants. But 100,000 troops with all adverse weather, operational military equipment is lining up. If something happened, you'd take the Black Sea out of the export business because of whatever political infighting or fighting goes on with Russia and Ukraine. That would be explosive to wheat. But I'm not saying it's happening. It's just that's what's in the news. Everybody's all worried again like they were last May. Are you tired of wondering what the market is doing or utilizing the archaic delayed quote systems out there? Did you know that customers of our affiliate brokerage firm, Heartland Investor Services, gives free trading apps with live quotes, whether for your phone, iPad, or desktop, you can utilize through Heartland Investor Services. Call us 1-800-359-0221 to get live trading quotes and charts in your possession for free. Over in the cattle market, cash trade non-existent as it typically is on a Monday. The feedlots are holding out for 136 or better this week. Today, box beef reversing its losing trend of last week, up $1.63 on choice. Select is gaining $1.49. We have December cattle up 82 cents. 134.35. February up $1.22 at 138.92. April gaining 87 cents, 142.17. That's helping feeders stay stable, even though with the stronger corn, wheat, and beans. We have January feeders up 65 cents, 161.57, up against their prior resistance. March up 52 at 163.90. Hogs are higher. December up $1.12 at 74.87. February back to the best levels of last week. We're up 77 cents, 83.25. April gaining 62 cents, 87.97. Gold crushed today as Fed Chairman Powell has been renominated by President Biden to stay at the helm of the Federal Reserve. That crushed the gold market as he is talking hawkish because his transitory inflation is not going away. And so there's likely going to be not only the starting of the quantitative easing, the bond buying QE programs are going to be dialed back into next summer. Interest rate hikes are now anticipated possibly by June. So gold down $44.20 an ounce, $1,807.04 on the December contract that goes deliverable next Monday. February is trading just $3 above that. It's at $18.1020. Silver off 50 cents December contract, $24.27. Bitcoin down $1,135 to $56,900. And crude oil performing better than most expected. It's been announced that the U.S. is likely going to announce the official release of the Strategic Reserve tomorrow, along with unifying with a couple other countries doing it as well. But we have been doing coordinated releases that were agreed to in the past already currently. But keep in mind that the Strategic Reserve levels since 2003 because of always planned exits that take place anyway. And so with that, as they announced it, crude oil re-challenged Friday's lows, but held, and it's turning up. We are now trading $2 above Friday's low because OPEC is out stating, well, if you're going to do that, we're going to reduce production then because they want to take back control of oil. And they can, since the U.S. oil production has been somewhat neutered by the current administration. The growth aspect of it is not exciting anymore. And so with that, oil prices look like they might have made a low like we typically talk about. Whenever we go up into an expiration, oil makes a high, reference October 20th. And now I've stated whenever oil goes down into an expiration last Friday for the December contract, we could likely make a low. Well, it looks like we may be making a low and crude oil ready for another return higher. That's why I've been advising our clients looking at forward buying fuel prices for next year if this is useful pricing for you if you haven't done it already. But keep in mind, past results are not indicative of future results. Consider risk always carefully before ever investing. But for right now, crude oil up 81 cents a barrel January, 76.76. Gasoline, January up almost 4 cents a gallon, $2.32.5. Heating oil up 4 cents a gallon, $2.2825. Any questions, you can find us at heartlandinvest.com. Thanks for listening and have a... Just a reminder to always remember, past results are not indicative of future results. Consider risk carefully before ever investing. Our analogy is made with the best known information that is expected to be true and known, but it changes by the hour in the commodity markets. And so something that could have been considered fact can change as the facts change.